Is the US economy bulletproof? That's what recent price action in US stock markets have been saying, with the US economy showing a strong jobs market, decent GDP, a low unemployment rate, and inflation starting to fall. The idea of a soft landing could be replaced by a no landing, and buy the dip has been the recent rallying call. So it could be worth looking at Visa's shares. It's got a great seasonal pattern right now, and if consumer spending is set to continue for the first quarter of 2024, then look at Visa's seasonals. You can see that earnings are being released after the close this Thursday, and over the last 15 years, Visa's share price has risen 86% of the time for an average return of over 9%. So pretty decent gains and relatively small losses, although do note there was an outlier of 2020 where we saw a minus 32% maximum drawdown. If we just take a look at the moves in the price, we can see that actually recent price action is trying to put in a firm uptrend. So could it be worth potentially buying the dip at a retest of this level, maybe even this sort of short-term resistance level that we had around the 260 region? It's certainly worth looking at ahead of the earnings and ahead of this very strong seasonal pattern for Visa. Major trade risks. The major trade risk here, of course, is that Visa's earnings could disappoint traders yet again, and the seasonal pattern may not repeat again this year. There's always a risk that disappointment in earnings and the seasonal pattern may not necessarily repeat itself. That's the key risk for this outlook.